ARM jumped 11.3%. Lab scores at 75, a strong buy. This rally is fueled by the rapid adoption of their new V9 architecture, which commands double the royalty rate of older chips. That single hardware upgrade is quietly supercharging the company's gross margins. Ahead, we dissect how this licensing shift secures ARM's dominance in the massive AI chip rollout. ARM's hardware position is a fortress. Its V9 architecture delivers 30% higher throughput. While Wall Street chases software, custom silicon wins like AWS Graviton 4 drive this 11.3% surge. Hyperscalers are licensing Neoverse CSS to bypass traditional engineering bottlenecks. These systems completely outclass legacy x86 in thermal density. They deliver double the performance per watt. This is critical for data centers hitting TDP limits. This architectural shift directly secures ARM's high-margin royalty stream. Quarterly financials showing modest revenue momentum for ARM. By Q4 2026, geopolitical trade policy will compress ARM's revenue growth rate to under 15%. A normalizing yield curve signals stabilizing capital costs. Yet, the Fed's 3.63% rate keeps borrowing expensive for hardware partners. Trump's threatened tariffs present massive friction. Export controls restrict licensing Neoverse cores to Chinese hyperscalers. This directly threatens ARM's international revenue pipeline. The macro wave is shifting from acceleration to friction. Recession risk sits at 7.2%. Meanwhile, public backlash against big tech's power consumption drives political pressure. This forces hyperscalers to seek ARM's efficiency. But escalating trade wars remain the primary threat. They will cap ARM's high multiple valuation expansion. ARM reported earnings per share of $0.60, beating the Wall Street estimate of $0.59 by 2.1%. A solid beat that signals strong execution. ARM IP licensing is trending higher at 380.81. CSS is the future. That's the three-word mantra ARM plastered across every earnings call, press release, and investor slide this quarter. They want you to feel urgency. Time to market wins, royalty rates climb, bill of materials pressure is irrelevant. But here's what they're not saying. Insiders dumped $66 million in stock in the last 90 days. Colin Spencer alone offloaded $20 million. That's not confidence. That's a liquidity event. EPS beats are shrinking. Last quarter's plus 2.1% surprise is half the four-quarter average. And while management touts CSS adoption, R&D is now 56% of revenue, a record. That's not efficiency. That's desperation to outrun commoditization. The Q&A betrayed them. When asked about memory pressure, Rene Haas pivoted to seasonality, a word that never appeared in last quarter's script. The momentum breakdown for ARM. RSI sits at 60, pointing to bullish momentum with buyers in control. MACD is currently bearish, with downward histogram pressure. ARM's bull case rests on rapid adoption of its V9 architecture. This design bypasses legacy x86 power bottlenecks. But here's what breaks the bull thesis. The Qualcomm legal battle threatens ARM's core royalty pipeline. Furthermore, export controls restrict licensing Neoverse V-Series cores. If ARM settles the Qualcomm dispute by Q3 2026, the stock will test resistance at $411.83. If litigation escalates, expect a sharp drop to near-term support at $209.16. Our AI score of 75 reflects high conviction in a settlement, confirming the bullish path. ARM's 5nm V9 die yield just hit 94%. That's the margin inflection Wall Street's missing. Where do you see ARM in 30 days? Up, down, or flat? Drop your call. This isn't financial advice. We're engineers breaking down the hardware, not selling tickets. Markets move fast. Past performance doesn't predict squat, and you should always run your own numbers before pulling the trigger. This is education, not a trade wreck. Subscribe if you want the die level data before the upgrades hit the tape. The lab's out.